Hi, everyone. My name is David Bibby. I'm the CEO and co-founder of Hypercharge Networks. Delighted to be here today and presenting our story to you all. Let's get into this a little bit here. So, standard disclaimers. I'm going to try my best not to give any forward-looking information here today, but please be warned that we are an early-stage startup, and you must do your due diligence. So about Hypercharge, we provide smart EV charging solutions to our customers to help accelerate the adoption of the electric vehicle and the shift towards a carbon neutral economy. So I'm going to talk a little bit about the market itself at a high level here to kick us off, and then I'll get into some specifics about Hypercharge. I know everyone here is, it's impossible for you not to know what's happening in the automotive space and the transition from internal combustion vehicles to battery electric. But this chart here from Bloomberg just shows kind of what that trend looks like. And we like to present it from a historical point of view so you can kind of see the growth that's happened and then the projection here. So as of 2022, there were 10 million vehicles, battery electric vehicles sold globally. By 2030, that number will be 350 million. And just to put a little more color on it, every OEM out there has got an EV story, and they've gone all in. Many have said they will no longer produce an internal combustion engine vehicle by around the same time here. So there's just huge growth there. For us, infrastructure is the priority because a lack of reliable EV charging solutions. That's why I founded the company. Quite frankly, I'm an EV owner and a driver. I've been an entrepreneur, worked in some very large companies, helping them with their digital transformation. And as a consumer, back as early as 2019, when I bought my first EV, I realized that one of the biggest barriers was a lack of reliable solutions here, and felt like I had to do something about it. And that's what got me away from my previous role and into this one. Massive growth. There's 2.5 million public chargers as of 2022. By 2030, that number is 35 million. And that's just the public charging side of the house here. So essentially what we find is that EV drivers, they typically want to charge at home and at work, and then the public charging is sort of top up along the way. So there's this number here is just focused specifically on public, not the entire landscape. Zooming out for a second on the global energy transition. This chart here is really just showing how much investment is going to happen between now and 2050 in the energy transition. It is a staggering number. I almost don't even want to talk about things that are in the trillions, but this is $194 trillion going into energy transition in the next 30 years, a little more than 30. And 47% of that is specifically in our sector. So, as an investor myself, I look at these macro trends and think these are just massive opportunities for us. Narrowing down specifically on Hypercharge, essentially what we do is provide this turnkey solution. So it's a mix of hardware, software, and services all connected together to provide reliable, easy to use charging experiences, either at home, at work, or on the go. So we've grown a lot in the last 2 years. We started off with a small, very narrowly focused charging solution aimed at multi-unit residential, because that's sort of one of the key areas fastest to adopt and fastest growing segment. Since then, we've expanded into commercial and now into fleets. Fleets is one of the areas where I think we're going to see some of the biggest transition over the next 3 to 5 years as new vehicles come online, as companies have broader ESG mandates to reduce their carbon footprint. They'll be electrifying their fleets. So we're playing in that space. Commercial public charging, I already spoke about that and the opportunity size there. And then specifically in residential, everyone on this call at some point in the future will likely drive an EV. You may not drive one today, but probably in the next 10 years you will. And for those that already do, you understand, I would assume everyone I talk to understands the challenge and the opportunity that we're facing and that we're solving here. All that we do is connected by our platform, so it's all network. We have amazing apps, iOS, Android apps, make it simple, make it easy for the driver to get find the charger, start the charger. We manage everything, so there's a back-end platform that takes care of all the things like billing, load sharing, which is smart for the utility grid that doesn't have enough capacity yet to handle all these chargers. And so we take care of all of that complexity there. And then one of the new things we've just launched here is something we call Evion. It is a middleware solution. And what that's all designed to do is to connect the ecosystem together. Effectively, what we as consumers don't want are more apps, I don't think. And nobody ever told me they wanted another app on their phone to do something. So what we're doing is providing middleware that allows us to connect things together. And it's very unique in the market today. So I'll give you an example where you pull up to a public parkade, you want to add EV charging. What we've done is connected our charging network to parking apps. We'll do the same with fleet management apps, and we'll also do it with building management apps. So it kind of takes all the complexity, again, make it simple, make it easy for consumers there. And we're getting a lot of traction through that. It's all connected through service. People ask me a lot of times, like, what differentiates you in the market? You know, our products are different, and we can go from the smallest to the very largest fast chargers. But really, it's our people and our service that is the glue and the differentiator in the market here. Because, you know, we want to make sure that when you come to a Hypercharge charger that you're getting your vehicle recharged. And that isn't always the case. This industry has got a very bad rap already for putting chargers out there that don't work. And so we spend a lot of time and a lot of energy behind making sure that our solutions work. So what is the difference? I did talk a bit about it there. The other differentiator from an investor's perspective is that we're a capital light business. We don't do our own manufacturing. We use third parties for that. And everything we sell is based on an open standard network. So think cell phones that are locked in, nobody likes those. We use open standard hardware so that you're not locked in as a customer to us, which really helps. And it also helps us with the connectivity that I talked about there too, because over time, all of this needs to connect together seamlessly. Second differentiator, and the one thing we're really excited about and happy about, is our preferred partner program. So late last year, we started to develop a Hypercharge preferred partner program. We're continuing to expand that. What that is basically a network of resellers and installation partners that are out there working together with us on a day-to-day basis to help sell our solutions into their customers and make sure that we do provide that service. And then beyond that, innovation. We continue to innovate. Evion is just one of many things that we're looking at as this market evolves. We know that we need to stay on the forefront of innovation here. Our business model, we have 3 different go-to-market offerings here. One is a direct purchase, where our customers, in many cases, want to own the asset and have us manage it. The second, if they want to reduce the capex that they're using, we offer leasing. And the third is where we'll own and operate the stations in a public setting and earn our money back through utilization, and we call that charging as a service. Some of the achievements of the company so far: Again, we started the company in June of 2021. We launched our platform in April of 2022, which is really, we started selling before that. We're definitely a sales and marketing first company as well, through our partner channel. To date, we've sold over 2,000 ports. Our last fiscal year, we've completed at 2.4 million. We have over 40 partners already, and that number grows every quarter. The way I look at things, there's there's two main KPIs for us. It's ports sold and ports delivered. And so what we're doing is building a growing backlog. As you can see from this chart, the number of ports sold is much higher than the ports delivered. So like any good business, it's going to start building a backlog in its sales pipeline here. And we've already surpassed that in the first half of this year. So we're executing, we're growing. A couple of other things maybe to touch on. This is a good way to talk about that, is we're in 8 provinces and 6 states today. US expansion is a huge priority for us. We've hired salespeople and building teams both in Texas and in California, and are starting to build out our presence down south. And we're in 8 provinces already here in Canada and continue to grow. Some of the customers that we've worked with, we're delighted that, all the customers have put their faith and trust in us. And, a number of these are very large repeat customers, and companies that we add complementary services to their business. So as their business scales, hopefully our business will too. This is a little slide on the team. Myself, as I mentioned, we have a really good mix of people from the hardware space, from private equity, from the software development space. Our board directors, when we went public, we've brought on some amazing independent directors as well, that have experience in capital markets and in building and scaling and exiting other businesses as well. So finally here, our growth strategy for 2023 and beyond. We don't stop this when the calendar changes over at the end of the year. Continue to expand in Canada, grow in the US, as I said, innovate, and we're looking for other opportunities to start, potentially acquiring or merging with other companies as well as we go. So that's it. I guess maybe one final sort of a couple of points for me. Really what I want to see, I get asked sometimes, where do you see the company in 3 years? And so for me, what I would like to see is that we have an extensive network across all the major centers in the US. That's really important for us to continue to grow, and the market's there for it. We want to continue to build out that partner network, and that's going to be our path to scale, path to support, and path to evolve. And then finally, innovation in technology. So one of the key things, to talk about some of the things we're doing, and some of the things I haven't talked about yet that we're looking at that will build out our product portfolio and also allow us to innovate and integrate with other parts of the ecosystem. So I don't know, I think I'm right on time there.
Yeah, you're golden. We got good 10 minutes here for discussion, and I think we got a lot to talk about here. So we've seen I've seen this industry really accelerate much more in the United States, right? I've seen a lot of acquisitions out there. I think I even seen Shell. Did they start making some acquisitions in regards to charging stations? And I think it's just really interesting momentum. And who are you competing with in Canada to kind of be first mover status, so you can be that first person to be acquired by a major?
Yeah, there has been plenty of acquisitions already in this space here. We're not the first in this industry. And it is, as any industry starts to grow, there are many players that emerge. And over time, those players usually get rolled up into other companies. So Shell bought Volta. Yeah. Was the most recent one that I saw. and ultimately they continue to grow through acquisition. It seems like they started with Greenlots and they did Volta. Blink bought SemiConnect last year, so that was a huge merger. Really, I guess it was an acquisition, but certainly helped Blink's footprint. And ChargePoint is the largest player in the space here, and they continue to grow organically and strategically.
Mm-hmm, let's talk about the lifetime value of a device, and obviously that will change between like residential, commercial, or your third vertical there. What's it worth? Like when you start talking about we're delivering 2,000 ports, what's the value of that per device? Do you know the answer to that yet? Like,
well, we don't generally answer that directly. And because it depends on the type of charger that it is. So if it's a level 2 charger, those will range. I'll just give you some ranges to give you an idea here. Those will generally range from about 2 to 12,000 a piece. DC fast chargers start at about 50K and go up to 400K per unit. Yeah, they're quite expensive.
I had no idea.
Yeah.
And now this is another question that, does it matter what kind of electric vehicle you have if you want to use your system? Like if it's a Tesla, or do all these cars have the same plug-in system?
No, that's a great question. So in Europe, yes, they do. And in North America, no, they don't. So Tesla has a proprietary connector, but our chargers work with Tesla connectors, and I drive a Tesla and I use our charger every day, pretty much, or every couple of days, and it works fine with that. What's happening over time is most of the OEMs, like Ford and GM and Lucid and others, are all adopting this North American charging standard, which is a great standard. But that'll take time for that to happen. And there are adapters. Just think of dongles and adapters.
Mm-hmm. So who's your potential acquirer down the road? Is it actually like a car manufacturer, or is it gas stations? Like who wants to own this market down the road, or who are you pissing off?
Yeah, I would say, yes to all of that. It's oil companies, potentially. It is potentially car companies, because one of the things that Tesla's done really well is they built a supercharging network. No other OEM has got a network like Tesla's supercharger network, and so having that quality, reliable footprint there, in getting to scale quickly, they will be looking for ways to do that, and there are many other strategic players in the market that just want to own good assets, right, like ours as well. So I think REITs could be an interesting company.
Yeah.
And definitely other charging companies as the world evolves here.
Ultimately, you just become like a massive cash flow business, right?
Right.
Ultimately, you're just building up a massive customer base, and you have all sorts of opportunities, even private equity down the road, if you do it right. Yeah.
Yes, exactly. Yeah.
Got a question here. You said you currently don't have manufacturing in-house. Are you satisfied with your existing hardware providers? Do you have plans to stay hardware agnostic as the manufacturing side of the industry grows?
Yeah, that's a great question. Very happy with our current hardware providers. In the last quarter alone, we brought on 4 new product lines. So what that allows us to do is provide chargers, that work in Northern Canada all the way down to California, and in some very unique use cases as well. So yeah, I think the strategy is really sound, and there's a lot more competition in that space, which drives cost and margins down. So it gives us maximum flexibility here. Not that we carry everything, we don't. We really want to make sure it's certified and reliable. But yeah, we're really happy with that.
Mm-hmm. And then let's talk about your balance sheet. You got lots of cash right now. Where are you sitting at?
We do. We just closed a round in May of this year, and so we're just executing on our growth plan right now. and we'll continue to do that as we go here.
Yeah. When's your next set of financials due?
We just closed, so we'll close a quarter at the end of this month here, so probably 6 weeks after that, November.
Yeah. And do you see growing margins with scale, like on your manufacturing side, or like where do you see margin growth increasing moving forward?
Yeah, I see. So our margins are really, really solid on most of our product lines, and so we continue to work away on that. What I'd like to see more of is our SaaS growth, which is recurring revenue. It increases our ARR and our MRR and our services business as well. So we're starting to expand there too. The more SaaS we do, the higher margin we have. But it's really is incumbent upon ports under management, which is, so you kind of have to have that growing first before the recurring revenue side grows.
Yeah, and on your 2.4 that you did, what was your breakdown in hardware sales versus SaaS sales?
Yeah, it's probably in sort of around 85% of its hardware sales. 85 to 90 is hardware sales today, and say 10 to 15 in services and SaaS.
And what point does that flip, where more revenue starts coming from SaaS and less from hardware?
Yeah, I don't think it'll ever flip because the market's growing so quickly. We were just actually talking about this yesterday, and because I'd love to flip it, but the reality is that if you look at that second chart that I showed, the market's growing so fast that we need to, and continues to grow, that hardware will continue to outpace the services business for many years to come. But that's going to continue to grow, so that account will definitely grow over time. We also have, we're a bit like the Starbucks card, where our drivers put money on account for us, or with us as well.
Okay.
Yeah.
Oh, that's cool. I think it's just a really interesting space because like everyone parks a car, right? And hotels and all these big corporations, they all need to incorporate ESG and service their customers better. It's kind of like they're forced into this movement towards providing this, but they don't want to take on the additional cost, right? As well, because the maintenance of these things, the cost, the customer service in regards to all that is quite a big feat for these large corporations, right? So I think you got a huge market to tap into. What have you learned? Like you're not a genius to think of this idea, David, right? Like this is staring at us in the face, and other companies have tried similar models. What have you learned from your competitors that have either failed or merged to say, hey, this is how we want to do this better. This is how we're going to grow faster. This is how we're going to retain more customers. And this is how we're going to create more shareholder value. Yeah,
great question. I think the one thing that I come back to, and it doesn't sound like it's the greatest technology innovation, it always comes back to service and delivering on your promise. And you know what, we're a startup. We don't always get it right the first time, but we always make it right. And so, like, learning is part of our DNA as a company. Like the way we're set up as a company, we have a very structured approach to growth, and we're not afraid to test some things and try them. And if they don't work, which, if they're all working, you're not trying enough. So it's great. Like we have basically innovative market trials, what we call it. And we're running 3 to 4 of those at any one time. And hopefully one of them, the 4, will work. And if they do, then we do it again, we do it more. And so that's where we're at as a company.
I really appreciate that comment, that like, if you don't fail, you're not making progress. You got to push the boundaries, right? And I really appreciate your exemplary customer service model here. Like, let's just take it back to basics. Do what we do and do it really well, and service our customers very well, and give them a good offering that they can't say no to.
Right? I mean, at the end of the day, like, we spend all our time thinking about EV charging. The large developers across Canada and the US spend about that much time thinking about it. So if when they work with us and they realize the care and attention we put into delivering the service, and they know they don't have to worry about it, they come back and work with us again. And I think that's, as simple as it is in any company, quite honestly.
Okay, and that actually leads me to my probably last and final question here is I noticed your last press release, you actually had a government grant or some sort of grant, but associated with the project. So
yeah,
when, I'm sure there's grants available. Now, would they be more specific to you or would they be more specific to the client? Now, and would you work with the client to say, hey, this government grant's available to you. We'll work with you together to get that money and you're going to commit that money to this project?
every day.
Every day. Interesting.
All day. Yeah.
Wow.
Yeah. We have a team of people that work on that, on behalf of our customers and on behalf of our company to help find grant money that might be available to help them fund their project or partially fund.
That's awesome.
Yeah.
David, pleasure having you on again. And
thanks for having me.
Yeah, I wish you continued success. I think it's a super exciting space to be in. And I think this is just about execution.
Amazing.
So, yeah, good work.
Thank you, Arlen.
Yeah, thanks so much.
Everybody. Thanks, everyone.